What is up, everyone? Welcome to the broadcast. If you're excited to be here with me today, just drop an excited down in the comments. If you're excited to see where the market's headed, just let me know in the comments. Obviously, we might not be that excited about where it's headed. Obviously, as you can tell by my sensationalist headline, that's just good copywriting. But anyway, what I want to do, like I always do, is show an objective overview of where I think the market is, what's going on, where we're headed, what's happening, and all of that stuff in between. I think one of the most important things you can do in the market and in any sort of market that you're trying to be in, where your money is at play or where you have the opportunity to make or break something, is to learn how to think first. One of the most important things, and I was talking about this in my chat group or my signals group, and if you're interested in getting into that group, just comment group down below and I'll send the link over. It's a free group. We have a ton of great info. I just talk openly about everything we're going to do. That's a great group. So if you want to just comment group down below. But I was talking to the group about the idea of getting into these markets isn't about trying to find moonshots. It's not trying to make $1 million today. The way you need to get into these markets and the way we need to understand, and remember that none of this is financial advice. I'm not a doctor. I'm not a financial advisor. I'm just a guy here talking. If I used to tell people back in like the days when I was pursuing med school, like I'm not a doctor yet. I can't tell you where your belly button, I can't tell you that this is your belly button, but I can tell you the general area that it's located at. But anyway, one of the biggest things that you have to learn about is how to think. And when you learn how to think, what happens is you learn how to make responsible decisions for what you're doing and not look for the next moonshot. You learn how to actually hunt for it yourself. You learn how to put yourself in a position to where you can make longer term plays, to where you can make decisions to where you can win. And I think that's what we're missing in this market. And this market's obviously early, but I think that's the biggest thing we're missing. It's the idea that we don't necessarily take the time to really learn and identify and understand what we're doing. We ape into things and we get wrecked. And I think that's a really, obviously not the best way of going about things. So biggest thing is learn how to think. Let me share this link to my group and then we'll get this party started. Anyway, I think we're kind of at a crossroads in the market. We've also got the Fed's FOMC meeting coming up, and I think there's a lot going on this week that could make or break where we're headed. Cool. So let's get this party started. If you're excited, as I said, just comment excited down below. Let me know what you want me to talk about too. I come in here and do the market update. I missed my DeFi update last week, but I'm going to do it this week. I think what I'm going to do is an overview on stablecoins because it seems like in DeFi, 2022 has been the year of the stablecoin battles. We have US Terra coming up strong. We have US dollar coin. We have all sorts of different coins popping up. And we're also seeing a lot of coins depeg and just completely wreck people. And so what I kind of want to talk about is what I look for in a stablecoin that I think is going to really make sense and that's going to have legs and that's going to withstand the test of time. Often we think of stablecoins as these safe havens, but they're not always. There was this coin recently called, I think it was called Bean. They got exploited. And the coin wasn't necessarily backed by anything. It was backed by borrower demand. And then when the coin fell off peg and borrowers start pulling out and there's no borrower demand, the thing collapses. So you have to make sure you understand the mechanisms surrounding the peg and the reasonings why those mechanisms were created. Then you have to question the actual mechanism. But that's for the stablecoin video. We'll get into that next time when I jump on. If you're interested in that video, just comment stablecoin down below and I'll come and I'll put the link in the comments of this one. But anyway, let's just take a look at the overall market. It hasn't really been super eventful. We haven't, I mean, in the past 7 days, we've been down. One thing I will tell you right now is alts are bleeding pretty hard. There's not a single alt that's really like doing super well. Everything is kind of down. We've got XRP, 10%, Solana. Apparently Solana went down for like a whole day yesterday. So that's way down. Luna, which has been like the golden goose, is down. Everything's just bleeding. The only things that aren't bleeding are stable coins. Oh, look, Terra's bleeding. Just kidding. It's still $1. But that's kind of the market right now. And what's happening really, as you can see, is as Big Daddy Bitcoin bleeds out and just falls apart, Ethereum bleeds out a little bit too. But then as a result, alts bleed massively. This is why it's so important to have a portfolio that's hedged to mitigate a little bit of risk and hedged to be to position you to be in a good place when the market does go down like this, because it's really cool to have all of your portfolio be altcoins until the market tanks and you lose 95% of the value on all your coins. And then you look at your portfolio and everything's 60, 70% down. That's a position you don't want to put yourself in. And remember, it's not financial advice, but this is kind of the way I look at the market. How can I not only win in the bull market, but how can I hedge myself to not lose in the bear market? Then you have to ask yourself, what kind of investor am I? Am I just going to DCA into this thing long term, which is probably the best strategy? Or am I going to try to carve out a piece at the tops and carve back in at the bottoms? Either way is fine. You just have to understand either way, you probably want to mitigate and hedge risk. Like if I'm going to DCA into things over a 10-year period, and I think DCAing into like Polygon might be around, and I want to DCA into like some of these coins down here that are barely functioning. And I'm like, okay, I'm going to DCA into Ethereum Classic every month along with Ethereum. It's probably not the best idea, because what happens is a lot of these coins just disappear and vanish in bear markets. And so when I kind of look at my portfolio strategy, what I want to make sure is I hedge against loss and I hedge against the project completely failing. And the most important projects obviously are Bitcoin and ETH. So when I look at my portfolio allocation, I want to make sure I have a good chunk of this. I want a chunk of stables, and I want a chunk of maybe the most popular, or not the most popular, but like the biggest layer ones or something right now. And if that's even too much, then I think it just comes down to Bitcoin and ETH, because trying to play the game of what's going to win and what's going to lose is challenging. Unless you're in the middle of the bear market, you just start picking stuff up. Now, that's what I did last time. We were basically just sitting there and things were dead. And I started buying stuff and all of those things went up a ton. Why? Because I bought it at the bottom when things were dead. Nobody wanted it. Then it pumps and everybody wants it. That's an opportunity to get out. So that's kind of what the way we want to think about things. Fortunes are made in the bear markets. They're not made in the bull markets. In fact, I would argue that 95% of people probably, I made up that statistic, probably lose money in a bull market because they're chasing pumps. When you chase pumps, you're not in a rational mindset. When you're not in a rational mindset, you lose, and you'll do it over and over and over again because you can't get out of that quick bucks mindset. And one of my favorite quotes is, he who chases $1 million today will die chasing that million. He who chases $10 today, $20 tomorrow, $100 the next day is the person who will die with that $1 million, or will obtain the goal of that $1 million. So something to think about the overall market, and kind of the idea of the way to think and go about this kind of stuff, and how to be in the best mindset. And if you want me to do more, I've been thinking about a how to think playlist. So if you're interested in how to think playlist, just comment how to think down below, and I'll start putting that kind of stuff together as well. But just looking at the overall market, nothing is really performing well at all. I mean, Dogecoin's been getting hammered. AVAX is even down into a pretty good zone. Polkadot, like nothing is doing well except for stablecoins. It doesn't seem like we have a lot. Tron had some decent news with stablecoin coming out. They could earn 30%, so they're up a little bit. But overall, it's a bad market condition to be in. As Bitcoin kind of edges lower, alts are bleeding because they don't have room to drive. As soon as Bitcoin goes down, they get dumped harder than when they came up. So they just can't pump in the right way to get any sort of movement to run. And so somebody asked me this today, like, what's something that seems bullish? And right now it's playing on narratives inside of communities. It's not really, nothing's going to really pump. Like you look at Axie, $30. That coin was over 100 not too long ago. Yeah. So all of these are not in the best position. And I'm saying all this just to say that right now might not be the best time to get into alts. If we continue to trend down, we'll start talking about it. And if we get to an inflection point where everything really bleeds out, it might be the best time to get in. Because when I look at the charts and everything's down like 19%, 15%, 25%, 23%, all of these tell me it might be a good time to actually get back in. And the other thing you have to think of, okay, are these good projects? Like Engine pumped up to like $4. They're still active. They're still functional. So once you understand that kind of stuff and you see like, okay, basic attention token, it might not be popular or sexy, but they're rewarding people with their basic attention token for watching ads on their browser. So they have an actual functional product that could be a business. So you look at that stuff, they're down 18%. It's down to 58 cents. It was up over $1. So a lot of these things provide huge opportunities when they do dump all the way down. When everybody's running away, like Warren Buffett said, be greedy when others are fearful, be fearful when others are greedy. So when nobody wants in, that's when I get in. When everybody wants in, that's when I get out. So something to think about. Hopefully that makes sense. Let's go into the overall markets. The first thing I kind of want to look at really is What does the actual overall market look like? We got the Dow. Well, let's take a peek at that. And I'm going to be honest with you, nothing really looks amazing right now. We do have the Fed meeting. So if the Fed comes in and they're not so hawkish, hawkish is like bearish. If they're more dovish, then it could be good for the markets to pump up. Something I've kind of marked on the Dow as a point of like, I guess, no return, that notice here that we had higher lows. And so because we had higher lows, it was good. We were still trending upward, but we've been legitimately crushed. So since February, March, April, then we dumped. And so now we've moved into a lower low, which is not the best situation for the Dow. So looking at what happened was we came down and we touched back here where this technical bottom was, which puts us maybe in a double bottom situation. That could give us the strength to drive back up. And we did sort of touch and drive all the way up. And maybe this is a little bit of a relief rally before the Fed has their talk. But when I kind of look at the Dow and how it's functioned, it hasn't been very good. It looks like we actually had sort of a peak, a blow off top, if you will. And then we've just been all the way up, all the way down, all the way up, all the way down. You can legitimately put this next to the Bitcoin chart, and it really doesn't look that different. So when we kind of look at that, it's sort of the same scenario. Basically, we went up, we got dumped, and we've been kind of fighting through in that same situation. So it's not super different. When we look at the volume in the overall market, we've got it's as you can see, like down here, we had volume start to creep up, which gave us this giant updrive. Volume isn't bad, but when I look at the Dow, it does kind of look like we are flirting with the opportunity of achieving a new low, which would not be good, because then we have this sort of inefficiency here, and then that puts us somewhere around this like 3130-ish range, which wouldn't be good. It probably puts us in a recessionary pathway. So something to pay attention to is what the Fed says and whether or not that's hawkish or dovish, because that's going to dictate whether or not this market moves up or down. The other thing that we can kind of look at is the NASDAQ, which is primarily comprised, the NASDAQ 100, of a lot of like tech and growth stocks. So it's obviously been getting hit pretty hard. One thing that I had mapped out right here was, this little line of support we had. It was basically the NASDAQ was achieving a lower low, and then it was able to wick and hold that. And then we just completely fell straight through and got annihilated. Like people say, oh, Bitcoin's volatile. Look at the NASDAQ right now. Growth stocks are getting pummeled. Like the stock market looks just as bad as the crypto market right now. So then we fell all the way through. We hit this little line of support I made, and then we kind of bounced up. So now we're going to be stuck in this zone. It's going to have to make a decision fairly quickly. Fed comes out dovish, maybe we pump back through. Fed comes out hawkish, that we die. So it's kind of where we're at. We're not in the best situation, I think, especially here. We had a good support. We fell straight through it, and then we fell straight through that, and ultimately set us up with a new lower low, which is not a good indicator of success in terms of where we're headed. The other thing that I kind of look at this is oil's pumping, but the other thing I look at is the US dollar index. And what's been happening with the US dollar is and I talked about this in a previous video, but whenever the US dollar pumps, Bitcoin tends to not do as well. And what's happening right now, because I think of the situation around the world and what's happening, people are moving to the US dollar as a sort of safe currency. And that's what's happening right now. So ever since June of 2021, the dollar's actually been in a really strong uptrend. And then right here in April, we had this like massive candle that happened that just pushed the dollar from 98 all out of this little zone that it's been stuck in. And it's actually held support above there, which is interesting because we've been stuck in this channel since like 2014. So from 2014 till about 2021, the dollar's kind of ranged sideways in this channel. And now all of a sudden the dollar is pumping up hard, which tells me maybe a lot of people are flocking to the dollar in terms of other currencies to protect themselves from potential downturns and the chaos of the markets right now and just the chaos of the world in general. But the big takeaway is if this thing keeps going up, that's definitely not a good sign for Bitcoin, because Bitcoin doesn't do well when the dollar tends to pump. Like you look at when it started to really pump back up was June 1st, 2021. We come back and we look at Bitcoin in June 1st. That was a pretty big dump, I think. Yeah, that was our bottom, basically, June 1st, 2021, when June started. That was when we hit bottom, and that's when the dollar started kind of pumping back up, and then we hit that secondary little pump. So something to pay attention to and look out for. It's interesting that we're actually holding above this. Likely it'll come through and like retest and drive, or fall through and stay in this pathway. I mean, it could stay in this channel till like 2035, but it seems like it's in a point to where it wants to move out. ETH, when we look at ETH, it's in a similar position as Bitcoin. It's not really, I mean, it's been holding strong. The ETH2 announcement was delayed, so that was not good news that came out in terms of ETH. But when we look at where ETH is at, it's basically done the same thing. It's been rejected off the bull market support, and now it's just kind of chilling here. It actually looks better than Bitcoin in reality. I mean, we have all of these higher lows, and then we actually have this higher one up here, and now we're just chilling here. So ETH actually looks a lot better because we still have these higher lows being established. And when we look at volume, there's not, as you can see, like right here is where it peaked. So volume high, achieve a new high. Volume in the red here, we kind of dumped down. And so right now, ever since that high, we've kind of just been getting lower and lower and lower, which tells me that we're going to get a spike that's green or red. That's going to go obviously up or down, but that's something to pay attention to. The other thing I look at is the monthly is red. So April and May so far are in the red. The monthly has a bearish crossover. The weekly on ETH is kind of flirting with a bearish crossover. So when we look at the weekly, actually we have the bearish. So we came up, we crossed, got rejected, and now we're straight back down. So if we have some green this week, then it could obviously come back through. If we don't, then probably going to see a continuation of the dump cycle. And when we look at Bitcoin and where it's at, what's going on with the weekly has been a pretty good indicator for me on market direction. But when we come back over here on the weekly, and I talked about this previously, when we pump through and it keeps going, probably a pretty good sign for a new all-time high. But what happened here was we pumped through it, got rejected, fell right back down. So if this is another red week, guess what? We're going to continue back down. So this is going to continue to stay bearish, and it's almost going to, in my opinion, a guarantee that we're going to continue moving to the downside. Now, if this somehow magically starts pushing back up and clears, then we're going to range still. We're going to come up, probably going to test this bull market support zone again, which is now sitting here at 41 to 42, and then up to 47 at the high. So it's kind of what I'm paying attention to. It just doesn't appear that we have a clear direction. Like we have a little bit of green, a little bit of red, could be a little bit of green, a little bit of red. Then all of a sudden we're going to get this volume spike, and that volume spike is going to launch the thing probably. And as you can see back here, we have these periods of higher volume where we go into a peak, and then we have these periods of disaster where we have the higher volume in the red. But we're up here in this green one. When we look down here, we haven't had a lot of volume in a long time. Even like this run was most likely people expecting a big pump in December, which never really happened. So this was probably just retail, maybe even retail investors, probably institutional investors pumping this thing up in anticipation of the 4-year cycle, which never happened. So when we look here and we look at the volume, we didn't really have significant volume since January 2021. And so what does that mean? Well, technically, because we haven't had significant volume other than getting dumped on in May, and significant volume in the green, tells me that this was our peak. I mean, this could have technically been January, could have been technically the end of the bull run when you kind of look at the charts. And then here was kind of a relief rally of people anticipating the blow off top to happen that never did. But when you look at it, the last significant volume spike we had was right here when we dumped off in May. So what am I saying right now? Well, this volume keeps trending down until all of a sudden we go boom, and we go either straight down or straight up. Now, what's more likely? And so in my opinion, with Bitcoin, and this will drag the rest of the market down, in my opinion, what's going to happen is we're going to come to a decision pretty soon. And I think it's going to dictate, it's going to be a big thing to look at. It's going to be where this weekly kind of ends up. So if this stays red and continues this direction and does not cross back over, my opinion is that we are going to probably look to find a new bottom. or find another low. If this thing manages to cross over and comes back and kind of tests itself, then we will probably come back up and test this bull market support band again. So I think if this blue stays below the red, we're probably in trouble. If this week it can get some green and pass over, we'll probably range a little bit more. In my opinion, with the way the market's moving and the way people are kind of talking and looking at, let's look at the monthly. It does not look like we're going to move upward right now. Right now, I mean, technically we still have higher lows. We barely made it on this chart. I mean, looking at this, technically our April, I mean, technically we've already put in a lower high, I mean, a lower low. So it was like 37.6, 37.1, and then 37.4. So what that kind of tells me is, I mean, I might be leaning toward the side of us starting to trend downward and having a significant volume spike that puts us somewhere in the area of, kind of like to look at logarithmic regression bands for this, because like, look how close we're flirting with this. I mean, we've been flirting with it for a while, but we're sitting right here at 36.8. And so I think if we don't have this volume spike, I think if the Fed comes out hawkish or whatever, it might already even be priced in. But what might happen is this thing comes back down. If we don't pump all the way back up here, and we might, and we get pushed all the way down, we're going to probably test this. Like, look at where we tested, almost on the letter on that bad boy. And so if we can test that and drive up again, we're fine. But I think what's likely happening, what's starting to happen, especially with this horrific month, we had two good months and then a complete dump. So one of two things: this could have been the dump that we needed that brought us all the way back down. It could push us up to actually clear this, or we're going to start putting in lower lows. So what's going to happen is this will pump and then it'll come down and it'll dump. And then what happens there? Well, then it's going to come all the way back down to 28 probably. And that'll end up being like close to the bottom. I think what will likely happen is we'll wick off of like 20. That won't be 21. We'll probably wick off of like 23 or 24, and it'll push back up to 28. And that's the moment we'll know that we found the true bottom. So if we come into this area, that's the true bottom. And I think something down here would end up being a really big wick that drives us back here. And then what'll happen is we'll finally move on and probably be able to drive back up. When you look at the previous cycles when that's happened, we had, like right here, for example, we finally capitulated all the way down. We hit the 200-week moving average. We wicked off of it. And when we stayed above this sort of support line, same thing back here. Finally moved ourselves into a position to where we capitulated all the way down, and then we wicked off that 200-week moving average, wicked off of the bottom of this purple line. And then as soon as we wick off the bottom of this purple, it gives us the strength to drive back up. So when you look at all the cycles, lengthening or not, that's kind of been the catalyst to finally propel us up for the next move. Like right here, same thing. Come all the way down, wick off this line, moves us into, wick off this line, moves us into the next phase of the actual bull run beginning again. And so I think that's what might happen if we are unable to, if that bearish cross on the weekly holds and we continue to trend down. I think that's a good indicator that that's probably where we're headed. So something to look out for and pay attention to. If we are unable to hold that, this was the COVID crash. Rarely do we get that low. That was intense. But see the wick though, push all the way back up and then launch. So that's the thing to look forward to. I mean, a lot of people don't want to talk about the bearish side of things. A lot of people don't want to talk about the downside, but in reality, like this area right here is where like fortunes are made. For example, say this thing goes down and wicks off of 21. Say I have a limit order in around 26. Say my limit order fills at 26. And then say we finally, from there, we finally go on a run and Bitcoin pushes to the next phase of the bull run. Say Bitcoin pushes to 161,000, 28 to 161. It's a pretty good return. So that's how fortunes are made. Like looking at it in that perspective, it's the bottoms that we buy that create the tops that we need to really win in this game. The problem with most people is when they see this happening, they FOMO in. So they'll FOMO in like right here. and then ride it all the way down and get stuck in the thing. So that's the mindset of that I kind of want to preach about. We don't want to be in that mindset to where we're FOMOing in. I want to be in the mindset of, ooh, this is where the bottom is. Everybody else says it's dead. I'm going to jump into this thing and make an incredible amount of money off of the drive up, because I'm not in this short-term mindset. I could care less. I want it to go down so I can get better entries. So hopefully that's helpful, something to look out for. And then the last thing I wanted to look at was the Ethereum Bitcoin chart. I mean, it still looks pretty good. We're still broken out. We're still above. We're just trending down now, and sort of like I guess you could call this like a descending wedge, but we've wicked off this bull market support zone. We're still above this, which tells me that, I mean, alts are bleeding pretty bad right now. ETH is holding fairly strong itself. So what this tells me is when we do finally get the updrive, we're going to see some pretty significant movement from the alts, because this is a similar situation to like the US dollar, how I showed you that it was in that wedge for a while. Same thing over here. I mean, alts have been stuck in this thing since May 5th. That was their last big drive. We had alts go from here all the way up here in May. And that was the last time they had a really giant drive before kind of all the stuff previously. So interesting thing here is if we do get that uptrend, we'll probably see some pretty significant drive. And same thing here. Look at this. Alts capitulation May 19th, 2021, lots of red volume right there. Same thing. But then look at here, literally zero volume. What that tells me is there's a big move coming. And if that weekly continues to be crossed bearish, then I think we're going to see that move to the downside, and it should be a fairly large move that allows us to propel back up. So it's pretty much what I have to say about the crypto market in general. We'll look at DeFi in a second. Let me know if there's any questions. If you're watching this, just drop your questions. Oh, Kevin, you're in here. Most of us haven't switched from playing offense to playing defense after things went sideways. Yeah, exactly. And that's why when things go sideways, for me, I take profits, I move out of the markets, I put stables into DeFi, and I just earn off of stables while the market does whatever it does. Then when capitulations happen and the big move down to the downside actually happen, I can take my stables and deploy them and use them instead of sitting there stuck in coins. What are we looking to see if it holds or not to trigger the potential bull run? I think what we want to look for in terms of the bull run, what I'm looking for is, I think what a good catalyst, in my opinion, would be a huge let me turn this off real quick, would be a really large capitulation to the downside in terms of volume. Like if all of a sudden, see how high that was a trigger and a catalyst for this. Same thing right here. See how high the green is? Another thing you can notice is we've had actually declining volumes over time in Bitcoin, but see this one is fairly high, triggered this massive run up. So I think what we're going to happen, and then see this one, red, that triggered that final capitulation in May during that COVID capitulation that launched this back up. So what I think the catalyst we're going to see is we're going to see a really large red or green candle that's going to give it the energy to go down or up pretty high. And I think the other thing that I'm looking for is the weekly. If I see the weekly, notice how we're kind of like stuck right now. It's like decision mode. I think what we're going to find out probably this week is whether or not this thing is going to move us up or down, because the weekly, in my opinion, is a really good indicator of the direction we're going to head. So if this doesn't curl back up and cross, or at least get close to this, then I think we can expect downside. I don't think it's going to be able to propel itself back up. Now, if this thing crosses and moves back up, then we're still in decision mode. We're still going to go sideways. If it crosses and launches and bounces and drives, then we're in a good spot. So that's kind of what I'm looking for to see a potential big run. Like look back here. We had a similar situation over here when we crossed on the 200-week moving average. So in the COVID crash, as you can see on this chart, we had the cross to the downside and it didn't curl back up until we finally completely capitulated. And then it curled back over and we started. So this might be a scenario we're looking at where it crosses and it doesn't curl back up. So we have that final capitulation point and then we drive. And in terms of when that happened, when you look at the capitulation started in February 2020, and then it actually finally collapsed in May 9th, 2020, which is a pretty big black swan event. But then from March 9th, then in March, it actually started propelling back up, and that gave us the strength to really drive up. So that was a good indicator. When we look back here, probably another good indicator. So we had this bull run segment. Notice how over here, same thing. Look how long we attempted to like move past this thing. Let's find where we finally found a bottom, which was somewhere right here. That was a pretty gnarly bottom. So right here, same thing. Notice how we had the crossover, the fake out, like we literally just had. So we had the fake out and then it crossed back over, and then from August 4th, 2014 to January 12th, 2015, it took us that long to finally find the real bottom. So we crossed over, we fell, and then we just continued to dump. Then we tested it again, and then we fell through, and that was the final capitulation right there. And then what that did was we went through, we started trending up, we crossed again, then we rode over the top for a while, but that led to the ultimate drive up that put us in this position here in 2017. So 15 was technically the bottom, and then it took us until about October to finally clear the bull market support zone, and then we rode sideways, and then that put us in a place to where we didn't start driving up till 2017. So, and then looking at the idea of like a lengthening cycle here, what that could mean for us right now is we capitulate to the downside, and then say we finally get down there, and it's like, this will probably happen fairly fast, somewhere around like, maybe it's June 13th that we go down there. Maybe it's May or June. And then we hit that, and then we start driving back up. Takes us till August to get here. We clear November, and then maybe it's 2023 in January we finally drive up. So there's a lot of room for this thing to move. It could happen really fast in one candle. This is the weekly. It could take a couple of candles. So I think we're in a range to where it could happen pretty fast. It could happen in May, June. It could also take until January of next year. But I think the biggest things to look out for in terms of the capitulation are that weekly. I think that's really important. And then the volume. When we see the volume spike, we have a good idea of where it's headed. Let me know if there's any other questions. Is that wait until the end of the week thing? Oh yeah, my screen wasn't sharing. Yeah, so that's like wait into the weekly. So when we look at it, you want to, I follow this MACD cross basically, which is a good indicator. So you wait till the end of the week, and this thing, the candle's either going to be obviously green or red. If the candle's red, well, we're going to keep going down. If the candle's green and somehow we pump and stay above, then this thing's going to curl over and test it again. So that's the big thing to look out for. Does this candle turn red, and does this cross stay with the red above, and does it continue to go down? Or does this candle turn green and this thing starts to peel over and tries to test it again? That's a pretty good indicator in my opinion. All right, so that's pretty much all I have for today. I'm going to show you DeFi a little bit, and then we will move on to next week. Brianna's telling me it's time to go. Anyway, DeFi right now, it looks okay. Like we're down 1%. Looking at the chains, let's kind of look at how everything's doing. We've pretty much got everything down across the board. So DeFi looks beautiful. When we look at everything, pretty much the same. Solana's down a lot because they went down for like 8 straight hours. Phantom's down quite a bit. Phantom's had more FUD than I've seen on a blockchain in a long time. They had someone get liquidated for like $50 million. People were saying it was going to wreck the chain, and it didn't shut down. It didn't take it down at all. It actually performed better than Solana during the whole liquidation event. So that was actually pretty cool to see Phantom withstand that so well, and to see it actually hold itself up so well. So, I mean, DeFi as a whole is really pumping. Aurora just is a pretty good chain. I don't know if the token is that great, but looking at it as a whole, Near is still moving. Near is a pretty big favorite right now. A lot of the other ones are kind of just like floundering. Everything's moving okay. When I look at some of these that are like positive, but I see like 4 apps on it, that tells me there's not really a lot. They're depending on very few for this thing to be functional, which I don't like. What I like to see is like, let's see, like Moonbeam. Okay, it's got 21 protocols with 123 million. That's not that bad. They're up a little bit. We look at like this one. That's not, I don't, that makes me nervous. Then we look at Rose, 15. That's okay. We look at Optimism, 36. That's not bad. And then we come up here and we look at Aurora, 32. Okay, that's getting better. Polygon, 249. Like, that's great. There's a lot going on there, which means it's well distributed. Phantom, same thing, 222. Avalanche 206, Binance Smart Chain 380, obviously Ethereum 479. Even Luna doesn't have that many. So what I look is I like to see a lot more projects, and because that allows it to be more evenly distributed. And if something doesn't work or goes down, the whole network doesn't depend on that one thing. So it's pretty much what I have to say today. If you like this and found it valuable, just drop a valuable down below. If you want access to my group, just comment group down below and I will send that over. And I'm going to set up a stablecoin video this week. Yeah, thanks, Kevin. Sometimes I forget to actually share my screen. So then it's a mystery. And then I could put it on a podcast. Maybe I'm just training myself to be able to do this with no visual techniques. Anyway, I will talk to y'all later. I hope you found this valuable. If you liked it, make sure you like the broadcast and you subscribe to the channel and share it with people. The more people that see this, the better off it gets. The more subscribers I get, the more we can grow this thing to not be looky-loos for the next pump, but we understand how to think and where to think and what to think about in terms of how we're going to go about this game of winning in blockchain and coins. All right, I'll talk to you all later.